This is Talk 650, powered by CBS Radio.
Deloitte has prepared its year-end 2010 and 2011 outlook. It's called Oil and Gas Mergers and Acquisitions. A lot of talk, much more action, and it covers deals from the past year, sector by sector. Very fascinating. I was reading this last night. Joining us here is Jim Dillavou, who is a partner with the M&A Transaction Services of Deloitte & Touche LLP, and Trevear Thomas, a principal with Deloitte Consulting, is joining us from a remote, secure location somewhere in the foothills of Virginia. Jim, good to have you on, and Trevear, good to have you on the line too as well.
Good morning.
You know, it seems like we read about mergers and acquisitions in the oil and gas industry all the time. Jim, is that healthy? Because you see what happened with United and Continental here recently. They merged. A lot of people in Houston lost their jobs. Does that mean more job cuts for the oil and gas industry with some of these deals going down?
We really think that there's a lot of positives to M&A in the oil and gas industry as it relates to Houston. Mm-hmm. What it really does is it brings more capital into the industry, frees up funds to make new investments.
Yeah.
And really, a lot of the transactions we see are maybe sales of part of a company, some of their operations, and it's really just moving from one company to another. Fundamentally, the oil and gas industry is in Houston, and the jobs are here.
Yeah.
And we're not moving any jobs to Chicago.
Yeah, I don't see those guys going up there either. That being said, then, you know, why are we seeing so much activity right now?
Well, it's just, of course, you have a lot of factors in the market, but
yeah.
Commodity prices certainly have a lot of people's interest.
Yeah.
And, of course, commodities are strong, not just in oil and gas, but, you know, throughout the whole sector.
Uh-huh.
But, so $100 oil means a lot.
Yeah.
You add to it, though, the excitement around the natural gas shale plays, mm-hmm. and the fact that we've been able to significantly open up that market and have substantial new production that has a lot of people very excited.
Yeah. The big news this week, of course, Shell winning approval for a deepwater drilling project, the first to be granted for a project that had not been approved before the Deepwater Horizon disaster. And I think this brings up to 7 the deepwater wells that are greenlit for drilling right now. Obviously, this is going to give a big boost to everybody else, isn't it?
Well, it's certainly going to help. We still have a lot of projects that need to be approved, and the pace is still too slow, but at least it's an optimistic sign.
You know, the oil field services market's pretty hot, but these guys don't necessarily benefit directly from oil prices directly, do they, Jim?
No, they don't. But that doesn't matter. You know, the fact they don't benefit directly, certainly the activity in the market requires their services.
Yeah.
And particularly, again, when we start talking about the shale plays, they take a lot more work and effort, and they drill hundreds, even thousands of wells in some of these areas.
Yeah.
So it's creating a lot of activity for them.
We're going to drill a little bit deeper into this report when we come back from the break. Jim Dillavou, the partner with M&A Transaction Services at Deloitte & Touche, and Trevear Thomas, the principal with Deloitte Consulting, on the line from Virginia, right here on the Talk 650 Morning Show. I'm Brent Clanton for Stephen Kay and Tim Nesmith. It's 16 minutes past the hour.